it is about rampant, I use that word carefully, rampant price increases at luxury. Have you ever seen this before?
No, I haven't seen it in years. The luxury sector is strong. You saw growth in the mid 40s in the month of January. You see price increases going right and left. And they're pricing, they're obviously they have supply chain cost increases, but they're pricing at margin. They're pricing in some cases above margin. They're raising their average units. And this is not just at the very high end luxury. I think at accessible luxury, you're seeing a lot of increases in pricing. And the
Yeah.
reality is the consumer is paying. The high-end consumer wants to spend money on themselves. They haven't been traveling. International travel is way down, and they want to treat themselves. They've been stuck at home in the pandemic, and you're seeing it come about in terms of the luxury spending. But you're seeing it broadly in terms of overall spending. I thought that you might start to see a slowdown in January, and the reality is that the consumer has
Right.
been strong through the fall season and strong in January.
So, Steve, let's take this wider. This is absolutely critical. And I go to Feldman at Dana Telsey's group today, who said, look, Home Depot's getting it done. Home Depot's not Tiffany's. But with that said, Steve, do we miscalculate the slowdown? And can you, like James Bullard, Fed Bank president of St. Louis, can you say economic growth will be better based on what you see at Mastercard?
Right now, I'm seeing a strong consumer. You saw a 7% growth in January. You saw, let's call it high single-digit growth through the holiday season. And this was across segments of the consumer. So I believe, and it's in store as well as online. Online has grown, let's call it 60% since the beginning of the pandemic. The brick and mortar is back. People are back in department stores. I don't know that I see that slowdown yet coming. Now, clearly, you had the child tax credit stop. You have the markets that are volatile right now. There's the rising interest rates. So are there clouds on the horizon? Of course there are. Supply chain is starting to ease a little bit, but I think that you're in a situation right now where inventories have been in line. If inventories start to rise a lot, you're going to get back to this discounting in the fall. So I'm a little bit worried about where the consumer is going, but it hasn't shown up as a weakness yet.
Steve, is the signal different from the low-income individuals and the high-income individuals?
I don't think you've seen it yet. I think that because you had the support programs running through essentially through January with child tax credits, I have not seen that bifurcation. I would expect that you're going to start to see the middle of the market to the lower end starting to take a hit as you go into the year. Obviously, the high-end market's volatile in the stock markets, but right now it's been holding up really well. If you look at and I'm just using examples, whether it's the dollar stores or the outlet off-price sellers, they've been holding up really well. The luxury holding up well. Department stores have had the best performance in years. You saw 10% growth through the fall season in the department stores. So this is an economy where the consumer economy has been booming. Again, you don't have people traveling. You don't have airlines. Hotels are still constrained, and people have been buying stuff. And there's still a little bit of pent-up demand relative to the availability of some of the categories. So I would expect to see it continue for a bit, but there certainly is some questions about what happens as we go into the middle of the year.
I was noting that apparel sales, as you put out there, were up nearly 40% in January year over year, which is a record in the data that you've collected going back years. Are there certain areas that are driving some of the spending that will fade back? What do you see for the composition of consumer expenditures throughout the remainder of the year?
Well, I think we're in an apparel moment, and it's really interesting. People have been pent up at home. They've been wearing their sweatpants. Now they want to get out. But they're going to events and parties, but they're not dressing the same way they used to. It's not the same suit that they're wearing. You want fashion, you want newness, but you also want comfort. So there's a whole new styling that's going on, and those tend to last for several years. So my guess is that the apparel sector is going to hold up really well in the next year or so. So that's one where I feel good about, which could be good for the department stores. And it's going to be good for the specialty apparel retailers. Clearly, sectors that are the get back to outside, the restaurants, the experiential categories, the travel are going to start to recover strongly as we move from pandemic to endemic phase.